Okay, so welcome everybody. My name is Michael Fortin, and I am an instructor. We've been working with SCORE for probably more than 10 years now at this point. I've been an adult educator since 1994. So this is my 30th year of teaching and primarily working with adult learners. And I've been working with at the high school level for years and years doing adult education classes, but for the last 10 years have been working with SCORE and partnered with them teaching a variety of QuickBooks classes. I've been teaching QuickBooks for about 15 years now and have done many of these workshops, both in person and over the last several years, it's been almost primarily virtual, which is great because it gives us an opportunity to extend out and offer this opportunity, far beyond the classroom in Portland, Maine. So, but again, my name is Michael Fortin. I'll put up a slide here for everybody. So this is the title of tonight's class plus my email address. This is the QuickBooks Online version of cash flow planning. And my name is Michael Fortin. My address is michaelwfortin@gmail.com. That's michaelwfortin@gmail.com. So if you have questions about anything we've discussed tonight, you could reach out to me afterwards, and please let me know that. Um, let me see a couple of housekeeping announcements to get started. This runs from 6 to 7:30 this evening, and it's meant to be an interactive kind of webinar. All of you are coming into the session. I am giving you the ability to unmute your microphones and speak up and ask questions, and hopefully we'll have some discussion tonight. I think some of the best learning takes place when it's interactive and we can talk and share examples and pose questions, and it's just a great way to learn. So again, it's meant to be an interactive class. So if you have a question, I would like you to just unmute your microphone and speak right up. There's a small enough group here tonight. I think there's only 5 of us right now, so that gives us an opportunity to make this a little bit more informal. So on the bottom of your Zoom screen, there are window control buttons for your microphone and your camera. You can simply unmute your microphone and speak right up and ask questions. If for some reason you don't have a microphone on your device, the fallback plan is to have you put a question in the chat. I tend to move right along, so I might miss on occasion when a question comes in the chat. So I apologize about that. So again, the best way is just to unmute and to ask the question. I think that's really about it. At the end of tonight's session, for those of you who are here, we will share a link to watch the recording if you want to rewatch it. And then you'll have that as a resource to go back and review anything you'd like. We do encourage you to consider all of the SCORE offerings. This is the SCORE main group, and I know have a great mentoring program. I myself am not a SCORE mentor, but partnered with SCORE again to teach these workshops in the area of QuickBooks. There are 3 different versions of QuickBooks. The primary ones being the online, the desktop enterprise version, and also the Mac version. So this is strictly focused on using the online version of the software. So if you're not a QuickBooks user already, that's totally fine. And if you are a long-time user, that's great too. If you are more familiar with like the desktop or the Mac version, then that's also fine. But know that all the screens and things that we're looking at that we'll be working on together will be strictly in the online environment. Okay, so I'm gonna get started and share my first slides. One more time, my email address, michaelwfortin@gmail.com. And the overview of tonight is focused on cash flow planning with QuickBooks Online. And this will be a really brief overview of how to ensure that cash flow is something reliable, is something that will be helpful to you. So part of this discussion will be as to how to set yourself up for success with QuickBooks Online. The objectives here are, talking about to ensure how your data is complete. That means, making sure all your invoices, bills, and expenses are recorded in QuickBooks, how we ensure your data is accurate with bank reconciliations, because that is an important part, is that your bank information, all of your bank transactions are in QuickBooks. That involves connecting external accounts, or you can simply manually enter the information. And then we will look at generating several key reports in QuickBooks to help analyze cash flow, and then using the cash flow planner itself in the QuickBooks Online software. So, first we'll just give you an overview of QuickBooks Online in general, because again, you may be familiar with these various versions of QuickBooks. QuickBooks has been around a long, long time. I first started using QuickBooks, when I was in college, and it was the desktop-based system. It's been a rock solid, reliable performer. It's become one of the primary tools of accounting and bookkeeping and small business. And it's very, very familiar with most tax preparers, businesses. And over the years, they have, changed their focus now to offer it as a cloud-based so it's an online cloud-based system. They charge a monthly fee. It is a subscription-based system. It's available, anytime, any place, from any device, provided that you do have an internet connection. That you cannot use QuickBooks in offline mode. You must have an internet connection to use it. All of your company information is stored in the QuickBooks Cloud region. So anything, that worries about, like losing your information or whether you should back it up, all of those worries are kind of dissipate once you get it in the online environment. So you don't have to worry so much about that. There are different versions or different levels of subscription for QuickBooks Online, the Simple Start, Essentials, Plus, and Advanced, and it is suitable for most types of businesses. We're not going to go into too much more detail, except to say that on these different levels of the software, many students I work with will typically start with like the basic level, like the Simple Start, but over time, you do find that in order to do certain functions in QuickBooks, like if you track inventory, if you do any sort of project billing, those are examples of some functions that are very important in many types of businesses, that you do have to go to the plus level of subscription, which runs at about $70 a month. And you do need to buy a subscription for each business that you own, each EIN that you own. So each one needs its own subscription. So we'll mention that because of these different versions, some of you may not be familiar with the advanced version, plus version, advanced version of QuickBooks. In class tonight, we are using the QuickBooks Test Drive environment. The link is here on your screen. I also put it in the chat earlier, but I think those of you who joined earlier may not have seen it because it was once you join the chat, you don't get to see the prior messages. So I'm going to put it in there again. So this is the link in the chat, but I would suggest and highly encourage you, if you don't already use the test drive, to write down this link and or save it on your desktop, on your favorite device, and use it to practice and explore QuickBooks in a safe way, because not only will this give you the full kind of feel of what the advanced version of QuickBooks looks like and what kind of features and functions it has, it will also give you a safe place to experiment. Like if you want to enter an accounting transaction, a bookkeeping transaction of some point, of some type, and you're not quite sure how to do it, you could enter the transaction in the test region just to see exactly how QuickBooks will behave. And it allows you to do anything. You can delete customers, add customers, vendors, just about anything you can do in the full production version, the regular paid subscription version you can do in this test region. Anytime that you close out of the test region, it will forget everything you've done, and the next time you open it, you will restart with a brand new, fresh copy. So keep that in mind if you're practicing something and something you want to keep. There's really no way of keeping it long term. As soon as you close down the QuickBooks session you're in, it will reset itself back to normal. Another thing is, sometimes students who use this test drive link will be prompted to log in to your own regular QuickBooks account. It should not do that. You should not have to log in to your normal subscription. If you find that that happens and you can't get to test drive without logging in, then I would suggest that you take the link and try with a different browser. So if you normally use Google Chrome, which is what I'm using, if you were to take that link, paste it into Edge instead, for example, or Firefox, and do it that way, that should allow you to access Test Drive without logging in. It should resolve that problem for you, or vice versa. If you're normally a Edge user and you don't normally use Chrome, I would suggest using the alternate browser. And for most people, that will get you successfully into Test Drive. And I would encourage you all to use the test region tonight when we experiment, look through QuickBooks, because we do not want to risk doing any sort of erroneous transactions in your real companies. Okay. So moving right along here. So an important part of cash flow planning is to ensure that your data is complete. So you can't accurately use or rely the cash flow feature without having everything in QuickBooks. Now, I've had many students over the years who will indicate, I only use QuickBooks for invoicing, or I only use it to record my expenses. I use another program. Like I have a Square POS system, and I use track all of my sales in the QuickBooks. I only use track expenses. So if you have a situation like that, it is important that to realize that everything needs to go into QuickBooks in order to get an accurate picture of what your business is doing and to get an accurate cash flow plan. So the way that you get data into the sales data into QuickBooks, you've got a few choices. The slide on your screen right now lists sales receipt and invoices, and those are the two primary. You can also do journal entries to record sales transactions, but probably the most common, which is why it's first, is the sales receipt, which means it's recording payment at the time of sale. So if you were to go into a store and buy something at a department store, and go to the cash register, that it will spit out typically a paper sales receipt that you take with you, or an electronic one. Those sales receipts, QuickBooks makes the assumption that by a sales receipt, you have already gotten paid for that sale, and therefore it will record the payment and record the sale at the same time. If you're using a third-party app like Square, that's a common one, then oftentimes there is an integration that will be available between QuickBooks Online and your Square program. That third-party application, it's beyond the scope of what we're going to discuss tonight, but and I've never tried it myself, but I've had students who have and say it works pretty well. Requires you to make that connection between your Square Online and your QuickBooks Online, so that automatically your sales data gets ported over into QuickBooks. To it removes the necessity to have to enter that yourself. But nothing wrong with approach is a Square, or if you have just a traditional cash register, you can use the cash register, take a report out of the cash register, what's called the Z report, or print out the day's transactions from the cash register and get a summary total of your cash transactions. You can then take that and enter that into a sales receipt for that day and record the day's sales in summary form, and make sure that again all those sales get captured. The third way, it's the second one on this slide here, is an invoice, right? So if you have customers that have bought products or services from you, and they will pay at a later point in time, and you are going to track their balance and how much they owe you using accounts receivable inside of QuickBooks, then an invoice would be the way you would do that, right? So you do need to make sure that all of your sales are in QuickBooks as an important first step in making sure that cash flow planning, and really that your reports in QuickBooks in general are accurate. Okay, so I'll pause right there just for a second, and we'll see if there's any questions from anyone in the group. For those of you who have joined a little bit later, I've turned on your ability to unmute your microphone. So any questions, please just simply unmute, speak right up, and let me know if you have any questions.
I got a question for you.
Go ahead.
About when you said you couldn't save it, were you talking just about the test thing, or when you have your QuickBooks going, how do you save your information to keep track of it, or when you do your tax?
Do you use QuickBooks now?
No, I haven't never really used it much because I've never made enough to independent. So I'm looking at that.
Yep. Could I I'll answer the question, just the quick Reader's Digest version, but then I do have another follow-up for you. So as you use the QuickBooks Online system, you enter transactions, and as you enter them, they automatically get saved as you go.
Oh, okay.
So
I thought.
last week we did have, and we do have them periodically, an intro course in the QuickBooks Online, and those sessions we did talk about in more detail, like how you actually use QuickBooks, and you get a chance to practice with it, play with it. So tonight is glad that you're here, but we'll spend a little less time on that and more simply on the cash flow piece of QuickBooks. So, but feel free to ask questions. I'm happy to have you here, no matter what anyone's level is and what your experience level is. But a follow-up question, are you, what kind of business do you have?
Massage therapy.
Yep.
That's it.
And do you keep track of your record,
Um,
like
yes,
using
no,
Excel or a paper?
no, I never, and independent, it was
I'm
always,
sorry.
as far as being independent, because I worked for someone else, you work under somebody else who pays you
Yep.
independent
Oh, I
pay,
see.
but then it wasn't enough that I did on my own, but if I eventually have to do more of that, that's what I'm looking at, how to make
Oh,
a real
sure.
business. And
Yeah, yeah.
and it was like lately, then it was so little that you don't really keep much track of it. It's like less than that $600 a year. So
Right. Oh,
not
yes.
and
Right. I understand. So, all right. Well, thank you. That's helpful. So, yeah, I think that's pretty common. You have a small business, that just getting started, and many times it's just a side thing, or it's kind of an informal, and then you want to grow it, you want to make it more of your mainstay. So, um, just the important things, I guess, in that instance is, and it's also important to cash flow planning, is that um when you record sales, if I was doing a massage therapy session and I had a customer, unless they're going to pay me later, I would typically collect it upon the time when service was rendered. So that would be a sales receipt, and you would create a sales receipt, and it prints out a form, and that's why QuickBooks is so easy to use, is because it generates a form that everyone recognizes. It's easy to fill out. QuickBooks behind the scenes does all of the transactions for you, so it records it in the right place
good.
to take the take the take the difficulty out. If you've never done bookkeeping or record keeping before, it will do that for you. But another important part of cash flow planning is that um, QuickBooks is a great piece of software, and I mentioned this at our class last week. If you were to take if you say I want a comprehensive like course on QuickBooks, it would run about 45 hours of classroom time. There's a lot to QuickBooks. Not everybody uses every single piece of QuickBooks, but in general, if you were to use the basic, including payroll and all of the pieces that go with it, it's about 45 hours of classroom time. So there's a lot to it. And our time tonight is very, 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 very short. So it's we're just kind of skimming the surface. So that's why we have this one topic. We talk about cash flow planning. If you're interested in learning more about QuickBooks, please reach out to the SCORE group. Let them know that you'd like to take some other courses. We offer that introduction course, but we also have other topics, throughout the year. And any sort of feedback like that would be helpful, because if anybody needs any sort of training or would like to see a topic covered, if there's enough demand for it, we will offer it. So all right. So but getting back to cash flow planning and QuickBooks itself, another important part of getting your um sales recorded is to make sure all of the income that your business receives is in there. But and I'll go beyond cash flow planning, right? If you're using QuickBooks to do your taxes at the end of the year, you want to make sure that you have accurate reports. So all of the sales that you have should be recorded there. Another important thing is that you may, and really the primary reason why you would use QuickBooks is to get information, is to be able to view reports, to make decisions about how your business is doing. So if I offer several different types of services, maybe I travel and do massage therapy in at our various office buildings, and I'll go into office spaces and have massage sessions, or maybe I'll have a studio where I offer them, or maybe I'll go into a client's home and offer them, right? You can track and record all those different types of services in different places, and then get valuable information from QuickBooks to make a decision to say, geez, I've spent I've spent a lot of time, in office buildings and doing these, but most of my clients come, seem to be at my studio. So maybe I won't do the office anymore, and I'll just grow my studio, get, maybe partner up with somebody and expand my business that way. So those types of discussions and exploring like what would be the best way to manage your business all comes from information that you put into QuickBooks, and that's really the benefit of it all, is to be able to use that information all from the transactions that you're entering. So, okay. Any other questions before I move on to the next area of this? Don't be bashful. Just speak right up if you have a question. Okay, and feel free to jump in anytime. Anytime that there's a question that pops up, don't stew on it. Just jump right in and we'll talk about it. So the next piece of this, of course, the just as important as recording money coming in is recording money that goes out of your businesses, right? These are the kind of the four common situations that need to be recorded in order to get accurate cash flow planning, right? So if you write a check, those checks need to be recorded in the QuickBooks, and you could manually write those checks and record them in your QuickBooks register. You can also use the checks window in QuickBooks to write and print checks using the actual check forms. You can also use expense forms, which are kind of these general expense forms that allow you to record expenses, whether it be debit card expenses or a credit card expense or a cash expense of some kind. You can record all of that. And then if you have vendors that will send you a bill, and then you want to use QuickBooks to track those bills that you owe, and then track when the bills are due, you can use accounts payable feature in QuickBooks in the vendor center. Then you have that option too, the enter bills window, and then the pay bills window to pay bills. So whatever the scenario is, you want to make sure that all of the money going out of your business is captured. Another piece of this that's also important is that when you're starting, and many of you probably already know this, but I know that there's some new businesses out there, and I want to be helpful and just have you consider this, right? Is that when you formally start your business, you really want to make sure that your business bank accounts are separate from your personal bank accounts, because there's really no way easily to blend personal and business transactions when using QuickBooks, because you the assumption is that you're going to connect, hopefully, a lot of people do, your bank accounts electronically to QuickBooks. So every transaction that goes through your bank account will be fed into your QuickBooks and assume it's a business related income or expense. So if you're using it to do all kinds of personal transactions as well, all of those transactions will need to be recorded in QuickBooks. And it will really create a lot more work for yourself, and it will kind of cloud how the business is performing separately from your personal expenditures. And it really is a fundamental rule of accounting anyway, is that business and personal activities should always be separated. So literally, if you need to have a personal withdrawal, like of money, like if you're going to pay yourself, some sort of a salary or a wage of some kind from your business venture, you really should just write yourself a check or make an electronic transfer from the business account to a personal account to deliberately make them separate. Treat yourself as though you are just another entity outside of the business itself. And so it's important to have that set up from the beginning because not only to get accurate reports out of QuickBooks, but for the cash flow planning piece that we're going to talk about, you really do need to, make sure that you can clearly separate business and personal. And you will be doing bank reconciliations, which we'll talk about in a little bit. You should reconcile or compare your QuickBooks records to your bank accounts and make sure that they agree with each other, that they're in reconciliation and that they're balanced. So for all those reasons, just make sure that you have separate accounts. Okay, let me just take a look, see if there's any questions. I did see something come into the chat. Online, I wanted to see the online version more. I use Desktop Pro, right? Okay, so thank you, Annette. So I too am a longtime Desktop Pro user. Have used all the desktop versions, and personally, it was a little hard for me to convert over to the online version because the desktop version was so successful and it worked very, very well. It was easy to understand and use, that when the online system came out, it took a little bit of a learning curve. And the other thing is that in the beginning, the online version really did not have all of the same features and functions. So you had to give up certain things in order to use it. Now, at this point, the functionality of the desktop, there are still a few things the desktop version will do that the online version won't. And in general, the desktop version is less expensive than the online version. But QuickBooks Intuit over time has tried to level the playing field so that the online version looks at least as attractive, if not more attractive, than the desktop version by increasing the price of the desktop version so that it's just about as expensive, close, but not closely related anyway. They're still not exact. So yeah, so there's a lot of people that are in that boat and say they really think that they would like to switch over to the online version. I will say, and I mentioned it during the last workshop, is, as your if you were to go out and try to actually download and install the desktop version as a new customer, really hard to find it. In fact, if this year any sort of new subscription customers for most of the desktop products will be ceased. So they will not support it anymore, will not offer it for new customers. Existing customers can continue to use it for a little bit longer, but anybody new who wants to buy desktop won't be able to do that unless you were to buy like the accountant's version or the enterprise version, which is more expensive. So taking this into consideration, I think it's a matter of time before eventually the desktop version will completely disappear. That's just a prediction, not an official statement from anybody except me. But it's just watching how this has been progressing over the years. I think that's what we're looking at right now. So anyway, all right, well, so thank you for that, and I appreciate you mentioning it. I'm going to go to the next slide here. So we also want to make sure that the data is complete for cash flow planning purposes and to make sure that your reports are accurate. By connecting your either connecting bank feeds or manually entering your bank transactions, because that's always possible. Electronic banking is a great feature of QuickBooks. A lot of students use the electronic piece. And being a desktop user for many, many years, I got used to manually entering in all of my debit card transactions and checks and everything. And I personally feel like I have better control, and overall, it's just as easy to enter them manually than it is to electronically connect the accounts. But many people who grew up using QuickBooks, only using the online version of QuickBooks, would probably disagree because they've been using it with that automatic bank connection for so long. And because there are versus electronic entry. But so I'm going to make the assumption, though, that all of you are more excited about using the connecting your bank accounts electronically and having QuickBooks automatically sync with your bank account and download those transactions and enter them into QuickBooks for you. And but that is an important piece that does need to happen. If you're not going to manually enter your records, you do need to somehow get the information from your bank into QuickBooks, whether manual or automatic, because that completes a very important piece of what's needed to get accurate reporting and information. You've got many banks now who do participate and do offer the ability to electronically connect to QuickBooks. If you have a bank, if you use a credit union or bank that does not, usually at least they will allow you to export your bank information into a CSV file, an Excel CSV file, which you then can upload into QuickBooks and bring it in kind of that way. So one way or the other, usually there's a way of getting the data from the bank into QuickBooks if you don't want to manually enter the transactions. And if you think about the business that you have, if you had 20 transactions a day or 30 and you feel as though that electronic connection would be better, that makes sense to explore that. If you only have one transaction a week, I'd probably just enter it manually and wouldn't do the electronic banking. But you do have to get the information in there, because at the end of the out of a given month, you should be comparing the information in QuickBooks to the information on your bank statement to make sure that everything is accurate, both from the QuickBooks standpoint, but also from the bank standpoint, because believe it or not, they do make mistakes. And that's really the only way to catch it, is if you look at those statements. All right. And then, of course, credit card transactions and debit card transactions, those all need to be, considered. Bank accounts. So, any sort of savings accounts, checking, money market, all of those types of bank accounts should be in there. Credit cards, which, different than a debit card, right? A debit card is basically a withdrawal of your own money, but when you're talking about a credit card, it means you're taking a loan that you have to pay back and get charged interest on it. So credit cards are also a very important part of making sure that you have an accurate cash flow report and accurate just reports in general for your business. So again, very important that those all get entered in. A little bit more on the discussion of business versus personal. I touched on it already. And I mentioned most of these here, right? The fact that it's difficult to see how your business is doing when the funds are commingled. So That's important. Difficult to reconcile the business bank account without them being separated. Uh, You also have the fact that a business is taxed separately from your personal finances, so you can't write off any sort of personal expenditures, right? When you go to the grocery store and buy your family's groceries, you can't write that off as a business expense. I think most people know that, but so that's, you don't want those transactions, those personal transactions in your business records. Also simplifies any sort of tax audits. If you are to get audited by the IRS or the state, you want to make sure that you have clean records, and keeping them separate, business and personal, will greatly improve your chances of coming out better on a tax audit. And it's just simply easier for your accountant to manage too. If you have an accountant or tax preparer and they are helping you with your records, you'll have to spend a lot of time telling them which ones were personal, which ones were business related transactions, and it really just makes it kind of cloudy. So the reconciling of accounts is very important. So just to, I assume now that a lot of people don't bother with reconciliation, small businesses, but it really is fundamental. Any sort of business needs to have a regular, like a monthly reconciliation, that looking at the bank records compared to QuickBooks, where you compare. You also reconcile credit card statements as well. Make sure all the transactions that are on those statements are in QuickBooks, which allows you to identify any mistakes or any missing information. Because you may find, and I've seen it many times, where you go to a place, you use your card, whether it's debit or credit, and the machine isn't working, and the clerk may scan that card several times to get success. And in some instances, the bank actually charges you multiple transactions, multiple times. They're thinking that all of those attempts are actual purchases. So I've seen those examples happen. And really, you would catch things like that when you do the reconciliations. Or a check that you've written out never gets cashed ever. That's something that gets picked up during the reconciliation process, or even debit card transactions. In fact, I got last week, I received a letter from my bank. It's like a $70 transaction from like 2 months earlier. It says, "We apologize, but your account was never debited for this, transaction on such and such a date and place, so we are now deducting it from your account." um, and so banks do make mistakes, and those reconciliations are important. It also is important when you're trying to verify that you've entered everything correctly, and you have a tax professional, or if the government asks questions about your tax records, you can say with assurance that you're accurate, you have accurate records, because you reconcile them every month and everything matches up. So it's a very important part of the process in ensuring that you have accurate cash flow um, reports. And um, the other thing, bank feeds can increase accuracy, but they are not perfect. And so it is still a good idea to reconcile them. So you may think, if I connect to the bank, I'll never have to worry about it, but there are still issues. So it's very important to reconcile. Um, the other thing is, there is an account in QuickBooks called undeposited funds. That undeposited funds is like a holding tank. When you receive money from customers, before you bring it to the bank, QuickBooks will put that money into an account called undeposited funds. So it's important that you reconcile to make sure that all of those funds eventually make their way into the bank properly. So that's another way of checking to make sure that is accurate, right? Just to look kind of briefly at it, here I'm gonna go into QuickBooks Online. Let me see if it, here we go. All right, so you should be taking a look now just at my screen. This is the QuickBooks Online system for using the test drive link that I sent everybody, right? And just in case everybody who's joined us, in case anyone may not have seen it, let me paste it in there one more time. All right, so there's the link to get to the test drive system. The bank reconciliations are done here. I'm gonna go under transactions, reconcile. There's the left menu, transactions, go over to reconcile and get started. Just to give you an example of kind of what that reconciliation process looks like, right? So you first will pick, of course, which account you want to reconcile. So we'll assume it's checking in this case. And you would then look at the bank statement that you received for the month in question. So I'll make up a number. Let's say it's $4,500 is the ending balance per that statement, right? And then the date of that ending balance was like 5/31 2024, and I click Start Reconciling. So what QuickBooks will present me with is a listing, and I can separate this where it says I've got the all to show all payments and deposits. But if I want to separate, let's look at payments separately first. We can see that all of the transactions that involve money going out. So these are bill payments, expenses, checks. All of these things are deductions from my checking account. Okay, so what I would do is, of course, look at the bank statement itself and check off or mark all of the ones that have cleared the bank. So if I'm doing the month of May, for example, and I see that there's a $300 payment that went out in February, if I don't see that $300 payment on my bank statement, it's starting to get kind of old, right? So that's where reconciliation will identify, a problem that you can research and look into. But let's say that it did clear, so I put a check next to it, and I check all the ones that I see, right? And as I check these boxes, the difference column up here will show me how much of a difference it is between the bank's records and my records as I go through this reconciliation. So right now, just with the three I've checked off, I say, oh, I have $104, more than I should right now. So I go to the deposit side and I say, okay, well, here's the deposits. So we'll click, the ones that have cleared. And you'll say, oh, okay, now look at the difference. So the idea is to get that difference to zero, that you don't want any difference between your records and the banks. And naturally, if there is a difference, you need to find out why that is. And it's usually because there's something the bank has that you don't have. So there's something on the statement that you don't have a record of, or you have something entered in the QuickBooks that the bank doesn't have a record of, one or the other. So that process of matching them up, once the reconciliation is done and complete, you can then have assurance that at least at that point in time, all of your records are correct and will be, ready to, move on to the next month. So generally, right, you do a reconciliation once in a month and you don't do the next one until you resolve it and make sure that that difference comes down to zero. And the idea, of course, is to do them timely so that you complete the reconciliation before the next month comes by, because you don't want to have months of reconciliation to do. Because then as stuff becomes older, right, it gets harder to investigate where the issues might be. So anyway, so that's in general how reconciliations work. I'm going to stop and see, are there any questions from anybody? Remember, speak right up if you have a question. Okay, quiet group tonight. That's okay. Hopefully you're all out there and not outside mowing the lawn or something. Your computer's sitting here. That is, I joke about that, but that is one of the difficulties of doing virtual classes is that, in a physical classroom, it was easier to just kind of glance across the students and you could kind of look at someone's expression, whether they were, doing okay or whether they had that questioning look on their face where we needed to talk more about something. So anyway, I'm trusting you that you'll just speak up if you have a question. All right. So, here, let me let's have let's do a little exercise here real quick. Give me just a second. All right. So, I put a poll question up on the screen. Tell me what version of QuickBooks you currently use, assuming maybe you don't use any, that's an option there too, that you don't use QuickBooks. And then for those of you who do, the second question you have to scroll down is to ask, how long you've been using it. So if I could get everybody to fill that out real quick. It's also a way for the instructor to see how many people are sitting here. It's just to see who's sleeping, who's not sleeping. No, um, I'm just teasing. So, we'll give you another few seconds. I'm waiting for a couple more people, and then we'll share the results here so everybody can see it. So again, just final call, if you could answer the questions as to how many of you are QuickBooks users, for one, the version you use, and then how much experience that you have. All right. Well, maybe one of you stepped away for a minute. So we'll go ahead and just share the results of this. So it looks like we have a couple of you are online users, a desktop user, and a couple of you have never used QuickBooks before. Okay. And then for those of you who have used QuickBooks, we have call a veteran, more than 2 years out there, and then some newer users. Okay, well that's helpful to know. I appreciate that. We see another one. Give me just a second. I'm gonna put another question out there for you real quick. Just taking a second. Okay. Give me this. Okay. we're going to send you another question now. All right. So, how often do you reconcile? That means reconcile your bank accounts. So, just give me a sense of how often that takes place. And be honest, I'm not judging anybody on this, so it's fine. Okay, looks like we almost everybody. Give you another 10 seconds to get that last one in. Now I can, I guess, hope that the anybody who does not reconcile may not be a quick, because we do have a couple of people that don't use QuickBooks currently, so that would make sense that you would say never to that question. But all right, I'll go ahead and end it. We'll share the results here. So it looks like we do have some of you one of you that's doing it monthly, and then um, and my guess is probably the person who's been using it maybe a couple of years is more comfortable with it and does the monthly reconciliations. That's a guess of mine. But and those of you using it like every so often, you're not alone. A lot of people will do it that way. But it's good that you're doing it. And I find this very helpful just to get a sense of how often, because these are all like foundational things that make the cash flow accurate. So in order to get accurate records, you need to do all of these steps. That's why we spend some time talking about this, right? So, all right. So back to the slides. Another important thing, naturally, is reports to ensure your accuracy. So there are things you can do to make sure that things look accurate, right? So you have the balance sheet and the profit and loss, the two most important financial statements of a business that will help, and they'll verify the accuracy of your accounts. The idea is that you look those over, and if any of the numbers look crazy high or low, or totally off, or you don't understand something, it gives you an opportunity to explore. Maybe you're not entering in transactions in an accurate way in QuickBooks, or maybe you're miscategorizing something, or maybe you're forgetting to enter certain types of transactions, so it makes it look like you have far more profitability than you believe that you do. Whatever it is, there's a lot of reasons to look at those. The reports will give you you can customize those reports and filter them so that they give you the information you want, so they're easy to use and understand. You can save the reports, what's called memorize the reports, or save them, so that you can configure them the way you want and then save them that way. And then there's the ability to dive into the details if you want. If you want to look at the reports and then dive into the next level of detail, you can easily jump down all the way down to the transaction level if you want to. Then you can export those reports to spreadsheets if you want to do that for further analysis. If you'd like to use Excel to further analyze them, or to send the data to somebody for review, you have the ability to export them. So we're going to look a little bit at reports because it's an important piece of this. So if you've not had a chance to use that link to get into the QuickBooks Online system using Test Drive, you should do that now. Here, I'm going to cancel out of this reconciliation, and we're not going to we're not going to proceed any further with it here. It was just an example of it. So here, let's go over to the reports menu on the left-hand side where it says reports. I'm going to hover, and then I'm going to click on the reports menu option. Louisa, I see a hand up. Go ahead and jump right in there. What can I do for you?
That was a mistake trying to find that login.
All right. What can you were trying to look for how
To
to
find
get.
the login. I was trying to go elsewhere, but that one disappeared and it never opened or linked before. So
Are you in now?
no, I was trying to type it in and
Okay. Are you talking about the link to get into test drive so you can get into the same area I'm
yes,
in?
yes.
Okay. Yeah. So have you tried pasting it into your web browser or
Um,
clicking on the link?
don't see it again now. I did it earlier before you put your screen up, but then it's,
Here, put it in the chat. So if you
I
go,
don't see anything in the chat here.
so all right, at the bottom of your screen, there's window control buttons, like where you control your microphone and stuff. You should see a chat button
Yeah, I opened it, but it's nothing in there.
and nothing in there.
No, except the bottom that says, who can see your messages recording on, and your text can be seen by panelists. That's it. I didn't see it earlier, but I saw it flash on the screen and then
Oh,
this other screen thing covered it over. But
well,
I
we
tried to click on it earlier and it didn't do anything. So
well let's
I log in. Let's see.
let's fix that. Let's fix that for you.
Okay.
Um, here. Yeah, so I could either hold up a sign with the link or I could just show you the slide.
Oh, there we go. There it is again, too.
Okay. So, and everyone should again write this down. Keep it in your it is no extra charge for this link, right? This gives you the ability to practice using the test drive anytime, even outside of the workshop. So, you can see I won't repeat it verbatim what it is. It's fairly long. And I apologize that it's long, but
EO dot Intuit. Yeah, it doesn't highlight, it doesn't copy on here from mine.
no. That's why I put it in the chat, and I'm sorry your chat isn't working for some reason.
I tap blank.
While she's copying that down, any other questions from anybody? Or any other comments from anybody?
All right, now let's see if we can make a.
Who is the person who has the 2 years of experience using QuickBooks? Could you say hello? Might not be able to. Not everybody has a microphone. So, I see. I see a chat message. Hold on. Oh, mic isn't working. Okay. All right. No problem in that. Yeah, I was just gonna ask you if you liked QuickBooks, just to get a sense of whether you find it difficult to use, have a hair salon. Okay. Yep. Yeah. So I always like to ask, I like it. I don't like how they are leaving us. Oh, do you mean with the QuickBooks desktop going away? Do you mean that? They're leaving you? Oh, I have POS. Okay. Yeah. Um, I will say, not to get off on a tangent here, but that we do have a number of opinions out there about Intuit. There are other companies out there other than QuickBooks, and there are a number of accounting software out there. But QuickBooks is the most widely recognized and used. I mean, you have like those Danny DeVito commercials that you see. It's they put a lot into advertising. A lot. If anytime you mention QuickBooks, most people know what it is. If you go to a tax preparer or an accountant, they almost always demand you use QuickBooks for them to work with you. So it's just become like the mainstay. They really almost have the monopoly on it, it seems, of when it comes to small business accounting. Kind of at uh kind of at their will, right? I mean, if their customer service, I've had students tell me that it takes a long time to get answers, or they get somebody on the phone that can't really help them very well, and all of those types of things. So it's there are a large company, and there are some good things and some bad things, right? Just like any, um but it is because it's so popular and a very powerful program. I think once you learn how to work around it pretty well, and you learn the workarounds, that most people find that it's a pretty good choice. Yeah, it it is easy to use. It is pretty easy to zip around in it. So okay, all right. So I tried to give you a little bit more time to copy the link down. So we're gonna we're gonna keep rolling here. I'm gonna talk about reports. So I'm gonna go back into QuickBooks. Uh, so I definitely want to get onto the cash flow planning piece of this, right? Because that's what we're here for. But all of these things are related, so it's all very, very important. So going into reports, right? I used the left menu, clicked on reports, and I'm now in the general report center. And remember the ones I mentioned earlier, like the primary reports you use for a business, right? The profit and loss, the P&L, and the balance sheet. So under where it says I have these tabs across the top, it says standard, so that's selected, right? And I can scroll down, and you'll see under favorites, the third favorite in right near the top of this list is profit and loss. Okay, so again, I'm under the standard tab. I'm go below where it says custom report builder, and then I see the favorites section, and the third one down is profit and loss. So I click on that. So just to give you an example, right, of the P&L for a business. So this business is a landscaping company. They sell a variety of products and services. And you can see now it's giving us the time period from January 1st through June 12th of this fiscal year, right through today. And it shows us how much money, what our income looks like. And the income is divided into different types, like design income and landscaping services and materials. So all the different types of income that we charge. And of course, all of that is set up when we set up QuickBooks. We tell QuickBooks what we're selling, and we get to categorize and create the different types of income we have, so that we can track it in the way we want to track it. Because we do try to separate the different types of income into categories, so we can make some comparisons and we can get some information from it, right? Um, if I have a business where I sell, I'm a contractor, and I build houses, and I repair houses, and I build decks, and I do landscaping, like different types of work. I would want to know how much I'm earning in these different types of income. I don't want to throw it all into one bucket. All right, I want to separate it out. So, cash flow planning purposes, we also are concerned with the types of income too, because we want to get an idea of what our income is going to look like in the future. So Again, these are all the different categories. So this is just one of many different reports in QuickBooks, but this one is an important one. And if I want to get into more detail to say, geez, design income 2250, wow, that seems higher than I would have expected. You can click on it. You can click on that number, which I just did. I clicked on the 2250, and it will bring up like a listing of all of the transactions that where that detail to show us that report. Right? It's just spinning a bit. The QuickBooks test region does act a little slower than the normal production region, so I can't do much about that. But we can see transaction report, right? So it shows me all of these transactions between, and it identified April 22nd, May 12th, 15th, and 16th, right? Those and the customers and exactly what I sold in terms of where that 2250 comes from, right? So you can analyze that stuff. But again, this is only possible if we put all that information in QuickBooks. QuickBooks is a great program, but it's only as good as the information we put into it, right? So that is an example of how this can be a useful, like you should look at this profit and loss report of your business to make sure that these numbers look right. Dive into them a little bit, see and make sure that we're categorizing them correctly. Like if I'll make up an example. Let's say we're doing work for John Melton and we really didn't do design income. We know that we sold him an outdoor fountain for his garden. We might question whether we invoice this correctly, right? So there's lots of examples where you want to look at this information and make sure that it's right. So I'm going to use the left arrow in the upper left hand corner, which says back to summary report. I'm going to click that and go back to the profit and loss. Okay. And then as I scroll down, it'll give me a grand total of my income, total income, $10,200 from that time period, January to today, right? Does that seem right? Right? It's a question. You then scroll down and look at your cost of goods sold and your expenses, like all of the money that I have spent for this business and everything that I've bought is all listed here. Like that comes from my banking transactions, all the checks, all the debit cards, my cell phone bill, my insurance, fuel from my equipment, different things I've purchased and so forth, right? And we can see the end result here is, I have net income, a profit, in other words, of $1,642. And that also that tells me the bottom line. How am I doing? And if I think, geez, I put a lot of time and effort into this business, my net income is pretty low, you can explore why that is. You start looking through your expenses. You could say, geez, I spent $1,170 right here on legal and professional fees. My accounting was $640. I say that's expensive. I'm not going to have an accountant. I'm going to do it myself. I'm going to take this QuickBooks class with Mr. Fortin, and I'm going to learn how to do this on my own. And I'm not going to use an accountant. I don't know. I'm just making this up. But it's an example of the types of discussions you have in your head, maybe with your partners, whoever you have the business with, what you should do to help increase that bottom line to make it profitable, right? And again, all of this is possible only by looking at naturally, the transactions that you've entered and to make sure that they're entered correctly and completely. Other things you can do with this report, we can go and, we don't have a whole lot of time, but you can customize this report to show different things. And then in the end, use that kind of those settings and save them so that you can recall anytime you open up this report, it opens up in a certain way and it remembers how you want to display it. So there's all kinds of things you can do, to improve on it. So just an example of why reports are an important part of the cash flow piece. Okay. So speaking of which, let's get into cash flow planning and just talk a little bit about that, right? So I'm going to have us go to the QuickBooks desktop, the main dashboard of QuickBooks, right? So we're on the left-hand menu where it says dashboards. I'm going to hover over dashboards, and I'm going to then select planner, which is the second option down. And I'm going to go to the QuickBooks Planner. All right, give that a second to load. All right, I'm going to go ahead and switch to my slide deck for a minute. All right, so you should be able to see my slides. So the QuickBooks Online planner, cash flow planner, right? So through the cash flow planner, you can easily see the money that comes in and out of your business. And in this way, you can keep track of your cash flow. All right, so we're going to look at how to set up the planner and create, edit, and delete items. We want to make a note that the cash flow planner is not available in the QuickBooks Online Accountant, and if you've turned on the multi-currency setting, you cannot use the cash flow planner. It's also, I'm pretty sure that it's not available in some of the lower subscription levels of QuickBooks. You need to be at least a plus level or advanced, but I'm not completely 100% positive which ones it shows up in. But to set up your planner, you do need to first connect all of your accounts to make sure that your electronic accounts are, in QuickBooks. The other thing is you can manually add items for potential income and expenses. So the cash flow planner essentially takes all of the existing transactions into QuickBooks, and it will extrapolate from that information. Okay, but you can also add in things that aren't already in QuickBooks. Like if 3 months from now you're going to have a big expense, you can add that to your cash flow plan so that it's included in the plan, so that it's there, even if it's not in QuickBooks. Okay. So I'm going to go over to QuickBooks itself and we'll do it together. Okay. So the QuickBooks screen itself, I'm now again in the planner tab, right? I'm going to click on the Start Planning button. And let's see what it does, see what it looks like. All right, we'll click. Let's go. All right. So one thing it's showing me right now is that I have a negative cash balance of $3,422. Okay. And that comes from the information that it's found in QuickBooks. Okay. So what it's showing me, for one, is that I have these upcoming items. Okay, so it looks at all of the invoices that I've sent my customers, and it looks at all of the bills that I've entered, from the different people I owe money to, and it puts those dates down when those things are going to happen. Like, for example, I have an invoice for Travis Walden. Okay, it's dated 6/13, tomorrow. I expect to collect 4/14/72 tomorrow. Now I might not exactly on tomorrow, but that's what it's expecting, right? I also have like a bill. I owe Diego's Road Warrior Body Shop $755 on the 14th. So since that bill is due, it puts that expecting that I'm going to pay it on that day. Okay. So it goes through and it finds all of the invoices from my customers, all of the bills that I've entered, and lays them in here. All right. And there are a couple of pages of details. There's another one, an invoice. Okay. So it uses that information and it says, all right, I can now go to the bar graph and I can take a look at detail, right? As like looking at today, that's what it is. I can also look, what it will look like in the future. Now it's more accurate. I can click where it says add item. I've scrolled the page down a little bit and you can see add item. And I can say, listen, oh, that at the end of $3,000 infusion of cash, maybe it's I borrowed money from a relative or something, and they're going to give me this infusion of cash, whatever it is. So I put the date when this is going to happen. Let's say it's going to happen next Friday, a week from Friday on the 21st, and I'll say loan from dad. Dad's always taking care of us. All right. And we'll say it's $5,000. Okay. And then we could say, is that a money in? Yes. Is that a one-time thing, or is it a repeating type of thing? Like, am I going to get $5,000 every month? I doubt that. A one-time deal. So I'm going to keep it as one time, and I'm going to save that. All right. So now I've saved it. So now I can go and I can see the effect on the cash flow, right? So for right now, I'm in the negative 34.22. But if I look, you see I have this green section. That's where the money comes in from dad. And I'm now operating in the positive. Okay. Um, and I can extrapolate this. It's right now, it's set for 12 months. There's a little drop down box underneath the current cash flow balance. I can say, let's look only 3 months out. It will make the graph a little smaller, more focused on current periods. So it gives you a little bit more detail, right? And I can see. So what this tells me is that if I have negative cash flow, in other words, I don't have enough money to pay all my bills, right? I'm running in the negative. How we do that, right, is we either have to reduce expenses or we defer expenses until later when we have the money to pay them, or we increase cash flow now to offset the negative, right? So you can experiment with different things that you can do, right? And all you have to do is simply click on the add item, and you can add in income or expense items and change them around. Okay. Other things you can do is these upcoming ones. Let's say that this, let me go back to the first page of this. Let's say this bill of $755 really shouldn't be included in the cash flow plan, right? I can open that up and I can change the date. Say, listen, I know it's due on the 14th, but he told me I could pay it on the 21st. So I'll change it to the 21st and click update. And by doing that, now I take a look at the cash flow plan, right? You can see that it changed the graph, right? Is that it gives me, I'm coming into the positive much sooner than expected. In fact, on June 16th, I'll be in the positive. You say, okay, well, is there anything else I can do? Like, you can look at other types of expenses and see if we can defer any others. All right. That's the only one I could see. But for example, maybe Travis Walden's going to give us more money instead of the $414. He said, you know what? He told me that he's wants to give me $4,000 because he has this big project for me. Great. I'll put in and adjust the amount and click update. And now you can see how the graph is now changed. Right? Is that I'm now into the positive even much sooner than it was before. Right? So anyway, any questions on this? This is just a tool within QuickBooks. A lot of businesses, struggle with cash flow about, how to, I mean, and from a high level, right? We just need to remember that cash flow is all about timing. It's just simply about timing when money is coming in compared to money going out. There's been many businesses that have lots of business, have lots of customers and so forth, but they're cash starved, right? Just because we can't seem to line up the money coming in at the right times to pay the expenses going out. So a cash flow plan like this is just a wonderful tool within QuickBooks. But in order for this tool to be effective, hopefully you can see now why it's important to make sure all of your income is entered, all of your expenses are entered, all of your accounts are reconciled so that you get the most accurate information. All right, so we're getting towards the end of our time together. Let me pause and just see questions. Anybody have questions in the group? What does everybody think?
Hi, Michael. I have a question.
Hi, Leslie.
Hi. So I'm not making any money yet. I've been putting money in every month just to less money, hopefully, as it moves along. But would that be like a one-time addition, or would I make that like ideally I wouldn't be putting any money in, but how would I do that to track that?
Right. Well, yeah. So in that cash flow plan, like let's say you put $100 in every month, and it's always at the beginning of the month, whatever. You click on that add items button, and you make sure to add that as $100 of money coming in, and you can see what that does to the cash flow projection over time. So the other thing is that when you actually do bring the money into the business, make sure again that you have separate bank account set up for QuickBooks for your business. And when that money comes in, you should put it in, as an owner investment, right?
Mhm.
So be a
Okay. Yep.
deposit into your account, and you make sure you credit the account where you're doing an owner investment, and that will increase the equity of the business. Eventually, over time, when the business starts to make money, then perhaps you can take withdrawals out of the business and get some of that money back.
Right. That's my goal. Thank you.
Yeah. Yeah. You're very welcome. Yes. What other questions do you have? Had anybody seen the cash flow tool before, out of curiosity? You can just do a show of hands, like a raise hand. Anybody ever seen it before, used it? All right. How about this? Does anybody expect to use it now? Has this been helpful tonight? Thank you. I got a couple of you. Great. That's good. So you're not all out mowing your lawn. You're all here with me. Great. I didn't really think that. I know you were here. Um, any other comments or questions? Love to get some feedback before we close out tonight.
What would you call it when there's a withdrawal? Like if I get to the point where I'm able to take money out and repay myself, what would I title that?
Owner draw. So,
Owner.
yeah. So you would have a, yeah, let me do this here real quick. So just draw real quick a couple of T accounts, right? Um actually let me see if I have my handy dandy little pointer. I don't know if this will work, but no, not working. Right. So you have your owner equity account, right? And your checking, actually another one called draw. So this is what QuickBooks is doing behind the scenes, right? So there's two columns here. There's a debit column and a credit column on a left side or a right side on all of these T accounts. But when you first make that owner's investment, you're putting money, let's say that $100 goes into the checkbook. QuickBooks will also ask you to categorize where you want to put it. You're going to put it in this owner equity account. I would create an account that says, owner investment or loan from owner or something along those lines. And then over time, this will grow, right? I mean, you will see in the owner equity, that investment account will get credits every single month over time. So the number gets bigger and bigger. Eventually, when you have when you start taking money out of the business, then that would be a draw, right? So if you would then say, I'm going to take $50 out this month, well, that's a $50 reduction from checking, and it would be a $50 debit into owner draw. And that's what's interesting is if you look at the T column, it says owner equity, and the one below it says draw. You'll notice that one has on the credit side the money that's coming in, and then on the debit side, the left side is the money going out. So those will offset each other because credits and debits are opposites. So as over time, those debits will reduce the amount of the equity that you have in the business, and the owner equity, the money going in, increases the equity in the business. So at the end of the year, you'll probably hopefully have, you'll have a bunch of owner investments, but you'll also have a bunch of draws, and maybe they'll be close to balance each other out. You don't want to draw more money than what you have in equity. Or so you just, and I think we kind of do that. Most people do it informally and say, I have $100 extra in the checkbook this month. I'm going to pay myself. You might not really check the chart of accounts to see what the balance is, but you just kind of know, oh, this is how much I have. It must be for me. But QuickBooks behind the scenes will track this. All you need to do is when you enter your transaction into QuickBooks, like when you write yourself a check, you'll record that check, and you'll record it to the correct drawing account. And then when you deposit money, you'll record that money coming into that owner's equity account. And so this kind of bookkeeping discussion is good to discuss if you don't have a score mentor to look at, working with a score mentor, because that's what they do. They have business expertise. That's why they're mentoring, others, and they use that knowledge and skills to help people who are just starting off, get familiar and get comfortable and kind of know a little bit about how businesses run. But we also do some workshops on that. They run workshops like that on different variety of topics, and I've run some of those as it relates to QuickBooks as well. So those might be helpful to look at.
Okay, thank you.
You're welcome. I hope it wasn't too much information because there's a lot. It can be overwhelming at first, but all right. Any other questions or comments? Always happy to help, always happy to talk about QuickBooks, and we want these sessions to be helpful and useful to you. I'll pause for a minute just to make sure you can find your mute button, okay?
One more question.
Sure.
If we start to use QuickBooks, and that's what I would like to do, are you available for consultation if we have like questions or there's terrible tech support from QuickBooks?
Yeah, I mean, you are you located in Maine?
Yes.
Okay. Yeah. I mean, I have done some one-on-one tutoring with definitely. And you could just email me if you'd like, if you're interested in that. You also have SCORE as a resources. SCORE has a whole team of people that has this, mentoring program that, talks about just general business practice and things. But if you really are interested in doing more, no, I really want to just more on QuickBooks questions. Like those are things I could help with and would be happy to. So you can just send my email a message and we can talk about that.
Okay, thank you.
Of course. All right. Well, I want to thank all of you for joining me. Went over a few extra minutes tonight, but it was great discussion. Appreciate the engagement and like to see all of you here tonight. It was wonderful to get a chance to share some QuickBooks knowledge with you. Hopefully it was helpful. If you have any questions, again, reach out to me. My email address, michaelwfortin@gmail.com. Just send me a message and I'll be happy to help. So with that, we'll end tonight's session and we'll wish you a wonderful evening. Thank you for coming.